Welcome back, fellow stock market traders and investors. My name is Jeff, and this is part 2, where we are analyzing all the different sectors in the stock market, okay? So I put out the first video yesterday. If for some reason you have not seen that video, I will have a link for it down in the comment section. It will be pinned. In that video, guys, we just went through the first 6 sectors of the stock market alphabetically, okay? So we talked about energy and consumer staples, consumer discretionary. We talked about industrials. We also talked about basic materials. And then the last sector we talked about was healthcare. And I tried to give little tidbits of information while I cover each sector. I want to emphasize why each sector has its own level of importance. In this video, we are going to cover the last 5. And then, guys, make sure you hang around to the end of the video because I'm going to give you a tip. I'm going to give you some advice that I was given about 13 years ago and how my whole stock market game has changed ever since, okay? I'm going to give it away for free. If I was to perform this right now, it'd probably take me about 15 minutes. So really, it's going to take you no time at all. So make sure you all hang around to the end of the video. We're going to get started here in just a minute, but first, make sure to drop a thumbs up on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. 5 to go, guys. Let's talk about financials. Probably the backbone of the stock market, the backbone of the economy. This consists of banks, insurance, and some real estate companies. Not all, though. Mostly banks and insurance are going to fall into this financial category. Now, this is closely tied with interest rates. If interest rates increase, banks make more money. And obviously, when interest rates decrease, banks start making a little bit less money. Now, we have taken a few interest rate cuts lately. So in my opinion, I do think you're going to get more and more opportunities to continue buying into this space, and I'm actually pretty excited about that. I've been investing in banks for a long time. I've made a lot of good money, and some of these companies, like I said, guys, I hope I can pass them on to my grandchildren some days. Positions I feel like I am never going to want to sell. And of course, some of the companies in this space, Berkshire Hathaway, by far the largest company in this space. Of course, that is Warren Buffett's company. I've been investing in Berkshire Hathaway for about 3.5 years, but I've actually had a long-term position in Berkshire Hathaway once before, and I sold out of it. And I bought into some more of the disruptive companies in this space, and then I found an opportunity about 3.5 years ago to get back in it. Visa, JP Morgan Chase, that's my personal favorite banking stock, and MasterCard, Bank of America, Wells Fargo, Citigroup, PayPal, Square, pretty much anything to do with the financial sector is very, very important to have this sector in your portfolio, guys. And lastly, you will see some companies like American Express, US Bancorp, now Chubb Limited, ticker symbol CB. That is a stock I'm interested in right now, but do not own a position. And then Goldman Sachs and Bank of Nova Scotia. So very, very important that you have a position in the financial sector. Up next is information technology, or it's more commonly referred to as the tech sector. Now, guys, this is my personal favorite place to invest, my favorite sector by far. And as a young man, when I first started buying stocks, I can remember when my portfolio was almost 100% tech companies, okay? And it really took a trial and a pretty long process of learning about diversity. You know, I wish somebody made a video similar to this back when I first started getting into stocks, because tech is a very, very important sector to have, and in my opinion, you should have your most amount of funds invested into tech companies, but not all of your money, okay? Because like I said, everything trades on a rotation. Tech companies lead the bull market, as you will see here in just a moment. The biggest companies in the world, the first 5 or 6 of them are all tech companies, okay? Or they fall into the tech sector in some way. So while I do place very strong emphasis on owning and holding tech companies, I also know it is diversifying those funds and getting into all the sectors what will give you true great portfolio balance. And so some of the companies you are going to see in this space, of course, Microsoft and Apple. Those are the 2 biggest companies in the world by market cap. Both of them have over a $1 trillion market cap. I own far more Apple stock than I do Microsoft, but I have been building on my Microsoft position over the past 2 years. I'm also an investor in Google. As you can see, ticker symbol GOOG and GOOGL. Those are great companies. As a matter of fact, this video you are watching right now on YouTube, Google owns YouTube, and that is a big part of their huge earnings revenue comes from YouTube. Next up is Facebook, then Taiwan Semiconductors, Intel, Cisco, Oracle, SAP, and then keep in mind, guys, even Alibaba and Amazon also are considered tech companies, even though they fall into a lot of different categories like consumer discretionary. Alibaba and Amazon would also be considered tech companies. So again, this is my absolute favorite space, and this is where the vast majority of my money is invested in. And then just a few others, of course, Salesforce, IBM, Texas Instruments, Broadcom, Nvidia, Qualcomm, and Sony. Okay, so now some of those companies in there are chip makers, and chip makers have been so disruptive over the past 2 or 3 years. And it's really, guys, the chip makers that have been some of my absolute favorite positions to own. Going back to when I first started uploading here on YouTube, that's when Nvidia hit with the crypto boom. It was trading up into massive highs. You know, Nvidia went from a $20 to $30 per share stock up to $250, almost $300 in about 1.5 years time, close to 1,000% return. And now they are seeing some trickle down. The crypto boom has kind of come to an end temporarily, but I still find Nvidia to be one of the strongest buys in the tech sector. Like I said, along with Broadcom, Texas Instruments, and of course Qualcomm. Down here at the bottom too with Sony, that's another really great company that does not get spoke about nearly enough. Sony is up over 300% in the past 5 years. Next is communications. So I think there should be some very urgent emphasis if you are not invested into this sector yet. I think as 5G continues to be rolled out, I find it is very, very important to be invested into the communication sector. I think all of these companies that you see and that I will show you here in just a moment are undervalued, where communications, it does kind of weave together with tech, as most of the companies that can fall into this communications category could also fall into the tech category. The thing about communications that does separate it from all the other sectors, it is almost considered a utility, okay, because they're usually sending out phone bills every month, and now cell phones are considered almost a need, okay? Once upon a time, cell phones were looked at as maybe a toy or something, you know, maybe rich people had. Where now pretty much everybody is reliant on their cell phone for everything they do. And what I mean by it is similar to a utility is that I believe these type of stocks that sit in the communications area, guys, these stocks will hold up better during a recession as well, because one of the last things you would ever do when you're struggling financially is turn your phone off. And like I just mentioned, as 5G gets closer and closer and rolls out further and further, I think you're going to want positions in at least these top 3 or 4 companies with AT&T, Verizon Wireless, Comcast, American Tower. You could also throw China Mobile in there, Charter Communications, T-Mobile. Okay, T-Mobile is probably the most undervalued communications company right now. As you see, AT&T has about a $275 billion market cap, and they have a lead over Verizon, which has about a $250 billion market cap. You know, and then you look down here, T-Mobile has a $66 billion market cap. So I made a couple of videos about this a few months ago where I really pointed out, I really think you want to own them all. In my opinion, you want Verizon 1, AT&T number 2, but where you probably get your absolute best bang for your buck right now is owning T-Mobile. They have the most room to grow. And keep in mind, guys, these companies are not going to grow at the pace of Google or Apple or Facebook or Microsoft is. They're not going to have that massive amount of growth, but they usually pay better dividends. They're a little bit more stable, and they're also going to hold their value a lot better if there was a recession to happen or perhaps a full-on economic collapse. All right, guys, we are getting down towards the end. The next sector we're going to talk about is utilities. Now, this is your electric, gas, and water utilities. They have little to no competition in the areas they operate, and local governments regulate most of their prices. So, the deal with these type of companies, guys, they are also considered needs. So, it really does not matter what kind of shape the economy is in. Everybody is going to continue needing electric, gas, and water. And just the same as consumer staples and communications, these companies are very, very safe to invest in. You're not going to see a lot of volatility. However, you're not going to see a massive amount of growth, but they're going to be very stable stocks that usually pay good dividends. And a couple companies you are going to see in this space: NextEra Energy, Duke Energy, Dominion Energy, Southern Company. That is a stock I alerted right at the 1st of January. It is up 41.96% on the year, so it is returning very, very well this year. AEP, National Grid, Xcel Energy, and Public Service Enterprises, okay? Again, this is one of the best performing sectors in 2019, and in my opinion is still very, very undervalued. Make sure you are getting plenty of utilities in your portfolio. And now lastly, the very last sector we are going to talk about is real estate. It's pretty self-explanatory. Real estate companies are called REITs, or real estate investment trust. There's also real estate developers that you can invest in. Now guys, in my opinion, I think you should have physical real estate if you can afford it. That is something I'm going to be doing soon here on the channel. I'm going to be traveling around and looking at foreclosed homes, because I also speculate in real estate as well. So Crown Castle International, Equinix, guys, this is a stock that is up massively over the past 5 years. Simon Property Group, Public Storage, Welltower, Equity Residential, Ventas, and Digital Realty Trust. And this is just to name a few. And as you can see over here in this column, most of these stocks are up very, very well. Real estate has been doing excellent in 2019, so it actually might be time to sell out of some of these positions and rotate into some of the more undervalued stocks right now. Alright guys, so that pretty much wraps up all the sectors in the stock market, and I have a sector checklist right over here. So this is the advice I was given about 13 years ago, and now this is the wisdom I will all bestow upon you, is that what you really need to do, guys, is go through all of your portfolios. Maybe you just have one, maybe you have three, I don't really know. Seems like pretty much everybody I talk to now has multiple portfolios, but in strictly talking about your long-term investments, what I would like for you to do is go through, and each company that you own, try to find a home for it here on the sector checklist, okay? So for example, if you own Verizon Wireless, that will give you one for communications, okay? If you own Apple, well, Apple really fits into a lot of categories, but at the heart of it, it is a tech company. And perhaps you own NRZ, that's new residential, okay, that would fall under real estate. Go through all the stocks you own long term and go through and make a check by each sector that you own, okay? And when you get done, guys, see if there's any sectors that you are not invested in, okay? And now, in my opinion, you have just created yourself a goal. If you get done with this little project and you're at the end and you find out, hey, I'm not invested into industrials or healthcare or financials, that should be an immediate goal for you, okay? I'm not saying go out Monday morning and drop all your money into industrial stocks, but you should start working in that direction to find some undervalued companies in that space and start trying to get them in your portfolio long term. Now again, there is no perfect recipe for the absolute perfect portfolio. Like I said, I have probably 35% of my money invested into tech. But the one thing I have been prudent about is I make sure I'm invested into all of the sectors on some level. And again, like I mentioned, the sector I'm weakest in is healthcare, but I still have some of the bigger market cap companies in my long-term investment portfolio. So anyways, that's all I got for the video. Go down to the comment section. Again, same thing as yesterday's video. Tell me your favorite sector you like to invest in. Thank you as always for watching the video, and have a great day.